Hello, my name is Joe Anason, a junior in the Applied Investment Management program at Marquette University, covering international materials. Today I'll be pitching ERO Copper, ticker ERO, to be added to the AIM International Fund. ERO Copper was founded in 2016 and is headquartered in Vancouver, Canada. They engage in the exploration, mining, and development of copper and gold in Brazil. Copper accounts for 80.5% of the revenue and gold accounts for 19.5%. Revenue is spread primarily between the Americas, Asia, and Europe. Brazil accounts for a little over 50% of the revenues, with the United States and China accounting for 12.4% and 8.7% respectively. ERO holds a 99.6% interest in the Brazilian copper mining company MCSA, which fully owns the MCSA mining complex. Additionally, ERO holds 97.6% of the NX gold mine that produces gold and silver in Brazil. The board recently approved for the construction of the Boa Esperança project for a copper mine in Brazil. Copper is a highly demanded material and is the third most consumed metal in the world. Management has a focus to attain high internal rates of return and return on invested capital. For the Boa Esperança project, management is projecting a 41.8% IRR. This mine will assist management to achieve their goal of doubling current copper production by 2025. Additionally, ERO has been performing exploration programs around their current mines and have found additional reserves. Discussed further under Driver 1 slide. ERO Copper has a BBB ESG rating and are a low carbon intensity copper producer. They are a pure leader in reduced greenhouse gas emissions, with over 90% of ERO's electricity being provided by renewable energy, such as hydro, wind, and solar. It is recommended that ERO Copper be added to the AIM International Fund with a price target of $19.37, representing a 39.74% upside. My first driver for my investment thesis is mining expansion. Construction for the recently approved Boa Esperança project is to commence in Q2 2022, and production starting in Q3 2024. The mine has a 12-year life and proven and probable reserves of 357 kilotons of copper. Additionally, the measured and indicated reserves are 412 kilotons, and if this is fully realized, it will extend the mine life by 3 years. The addition of this copper mine will add $1.44 to EPS in 2025. Next, the company has been performing exploration programs at the MCSA and NX gold mine. They have found additional reserves to support their extension projects of the mine, called Deepening Extension and South Extension. At the NX gold mine, they discovered that the current vein is thickening. These exploration programs have extended each mine life by over 4 years. My next driver is expanding margins. Over the last 5 years, ERO has increased production and improved efficiencies. From 2017 to 2019, copper tons sold increased 117%, whereas cost of products sold only increased by 35%. For the same time period, gold tons sold increased 13%, but cost of products sold decreased by 1.8%. This has helped lead to a 29% CAGR EBITDA growth from 2017 to 2019. Management is projecting relatively flat C1 cash costs for copper with a slight decrease in C1 costs in 2025. Additionally, C1 and all-in sustaining costs for gold are projected to decrease along with increased gold production. With upcoming production improvements and revenue growth, EBITDA is forecasted to grow at a 14% CAGR from 2021 to 2025. Copper is the third most consumed metal because of its efficient electrical conductivity and being corrosion resistant. Then user products can be found in the automotive, heavy equipment, construction, electronics, electrical, industrial, and other industries. Currently, global demand is being driven by the transition to higher electric usage, renewable resources, upgrading infrastructure, and building new communities. Copper demand is forecasted at a 6% CAGR growth over the next 5 years. To reach an intrinsic value for ERO, a 10-year DCF model was created. The calculated WACC was 14.36% using the assumptions of a terminal growth rate of 1.5%, risk-free rate of 2.5%, and additional risk premiums of 2%. An intrinsic value of $19.96 was reached. A sensitivity analysis of the terminal growth rate of plus minus 50 basis points and WACC of plus minus 100 basis points ranged from $18.07 to $22.59 intrinsic value. Additionally, an EBITDA multiple valuation was calculated using a weighted average peer multiple of 5.68x, resulting in a relative value of $16.25. Further, a price to earnings multiple valuation was calculated using a 2021 EPS of $2.05 and a weighted average PE multiple of 10.23, resulting in a relative value of $20.92. Finally, a price to net asset value multiple was calculated using a weighted average peer multiple of 0.79, resulting in a relative value of $16.81. By weighing these models 70, 10, 10, 10, a price target of $19.37 was reached, representing a 39.74% upside. ERO faces a variety of risks. One of the first risks is commodity fluctuations. The commodity price for copper and gold is directly related to product pricing and revenues. Fluctuations may cause revenue fluctuations for the same amount of output. Next, Brazil taxation is a complex system and has a high degree of subjectivity and interpretation. This may lead to income tax amounts recognized differing from management's tax treatments, both positively or negatively. Lastly, ERO as a company and for financial reporting purposes uses the US dollar, whereas the functional currency for the mines are the Brazilian real. This may lead to translation and exchange gains or losses. David Strang and Christopher Dunn formed ERO Copper in 2016. Mr. Dunn serves as the executive chairman and previously worked in investment banking, primarily with Goldman Sachs. David Strang serves as CEO and director of the company. Previously, Mr. Strang served as president and CEO of Lumina Copper. There are 9 board of directors, 7 are independent and 2 are female. If you have any questions or would like to contact me, please use the email address listed on the slide.